Good morning and welcome to another edition of the Ashworth Weekly Market Update. We are happy to have you here with us today. We've got some interesting news today. It kind of tells the story of what's happened in the market so far this year. If you look at our chart here that we've got pulled up, the chart is basically telling us the difference between the top 10 stocks in the S&P 500 and the rest of the S&P 500. So by definition, there are 500 stocks in the S&P 500. And out of those 500, 10 of them are leading the charge. And you can see that from this chart. You can see the substantial difference in the remaining stocks between the remaining stocks have gained a little bit. The top 10 stocks have gained a ton, and they have pulled the S&P 500 up substantially. In fact, if you look at the names in those top 10, you're looking at Apple, Microsoft, Amazon, Nvidia, Google, and those types of technology-driven names that are dramatically increasing specifically because of the new AI, artificial intelligence, the chat GPT, and some of those types of things. A lot of those companies are able to immediately start using this new technology in their platforms, and the market has given them quite a bit of running room to be able to develop these markets. The problem with this, though, there's a couple of problems. Number one is that those names now are exceedingly stretched based upon their earnings that they have and the earnings that are coming in. The market value is quite a bit overvalued, and the good news is, however, is that the rest of the S&P 500 is still undervalued and still has a ways to run, and we are seeing right now a little bit of the again, it is happening a little bit at a time, but we're seeing a little bit of the lessening of that gap. Back in May, the S&P, these 10 names accounted for 100% of the S&P gain that we had thus far received in the year. So with the rest of the pack not contributing anything, those 10 names have gained substantially. The problem is that this is all highly data dependent upon the inflation data that's coming in. One of the things that will happen is that if inflation comes in as the market expects, which creates what the economists have called a soft landing, then they should be able to continue to grow, maybe not just as fast as they have grown so far this year. But if the inflation data comes in a little bit stronger than what the market has anticipated, then those names probably are going to have to pull back a little bit. Earnings are going to have to be revised, and we'll see a little bit of a pullback in those stocks. The good news is, however, is that diversification right now is the key to taking advantage of this market, because regardless of what happens with inflation and with what has gone on, as long as we're diversified, we feel like that we still have a fairly good runway as far as returns for the year and returns going forward. So with that, I'm going to close for today. Again, thank you so much for tuning in. If you have friends, family, or associates that you feel like could benefit from our weekly webinar, please feel free to forward our link. And again, thank you so much for joining us. Thank you again.